Hello everyone and welcome back to another market review. This is Silent. Today we are looking at the NASDAQ December contract for 2025. Starting off with the weekly chart. I've added a couple of levels since the previous video. I've first added a fib measurement from this weekly high to this weekly high, and I've cast one standard deviation higher, and that has been tagged. After we drew into this range, we started to trade lower, and today we had a pretty big sell-off. So the thing that we would want to be referencing on the higher time frame would be the weekly wick consummate encroachment. So once we broke down below that 89 level and traded back through the opening price of our weekly open, we began accelerating rather harshly to the downside. We expanded all the way down through the weekly 25% measurement that we were watching on this candle, and I've added the consummate encroachment range, and we blew right through that from the same candle, and we delivered all the way down into this weekly buy-side imbalance here. You could reference the smaller one as well, but it was cleaner to utilize this one on the chart. Dropping down to the daily chart, you could see that ICT Gallo a little bit better. That's measuring September 22nd high and the 27th high on the weekly chart, and then casting one standard deviation higher. You can notice the respect of that price level, the 365, on the daily chart and the lower time frames especially. What we're going to be watching for on the lower time frames is how there's no candle bodies that were able to close above that range on today's price action. And after we drew back down below today's open, we accelerated through the previous day's consummate encroachment and blew right through that daily order block that we tested yesterday. So we delivered down into that daily order block yesterday, traded off of the low, and then opened. We rallied up and made an attempt to create a new high and failed, and accelerated quickly below previous day's low and blew through all of these daily levels that we were utilizing on the upside of the swing here, and have extended this old daily high through the price action into current day, and you can see the respect of that on the closure today. So it was a very nice clean level to be watching for next week. I've extended these old daily levels through because it'll make more sense on lower time frames. We can see that price delivery had referenced them on the way down, even though that it's a big bold candle to the downside on the daily chart. It's a little bit cleaner in terms of retracements and redelivery on the lower time frames, and we will see that here shortly. You can see that 4-hour sell-side imbalance that I've extended from yesterday's market review. We've referenced it yesterday. Price delivered higher and made an attempt to rally and failed at the 365 level. Notice the respect of all these candle bodies here with that Gallo. There's a failure to launch entry here, so as price delivers down, this should have been a bullish rally and a continuation through with this candle, but it fails. So we fail to launch here and expand through the low here and make a quick dash into the previous day low and eliminate tons of sell-side liquidity on the way down. The only level that I didn't extend through was this 4-hour buy-side imbalance, and that is because this level was completely filled in as we were delivering higher, and the range here is balanced. So daily levels that I brought over in green were only partially delivered through on the 4-hour chart, and I find more significance in those ranges for draw on liquidity as we start trading lower. It just is way more exaggerated today because of all the news that is going on. Alright, let's drop down to the hourly chart. If you remember from yesterday's commentary, we were watching that hourly buy-side imbalance, and we extended that into today's price action. And we started today with a consolidation. Price drops down strongly during the London time period with a displacement. And then as we start to open in New York, price has a retracement, and we can see that failure to launch idea a little bit better here on the hourly. We should have accumulated here and on this open rallied really nicely if this was going to be a bullish setup with these levels being bullish, but this is kind of a red herring because these down close ranges, all they were doing was setting up a raid on London's high from yesterday, and it's a suspect rally because we failed to take the previous day high on this pump. So as we fail to rally up in here and we open on this candle, after we deliver down through the opening price here and the low of that hourly buy side balance, we could be looking to be a seller and to fade this kind of a rally. My first expectation for a drawn liquidity was the previous day low, and we extended much further beyond that on this drop down into the new week opening gap and accelerated through that range. We come off of the low that was created during this time and then open here and delivered right on through that wick. So this green shaded area here is a redelivered rebalance. This is the same idea as a immediate rebalance. So what's happening is we sell off and then come off of the low before it closes, and within the very next candle or two we open and then begin trading back through the previous wick that was created. So this delivery on both ranges here creates a balanced price range idea, and it's happening so fast that it just does that within two candles. So the very next one retraces up and respects the constant encroachment of that range and is treated as a premium array and offers a nice selling point here. The very next candle respects the constant encroachment of this wick, so we're still confirming that order flow is bearish, and we get a nice selling opportunity here, and it cascades lower into every one of our daily levels and eventually into that weekly buy side balance and the old daily high. On the 15-minute time frame, I've included the past 3 days of price action. You can notice how the Asia range here was our original consolidation for this sell model. We deliver higher with 2 stages of accumulation, and the very next day creates that retracement. We retrade all the way back down into 50% of the previous day's range and trade higher, and on today's open we continue that consolidation higher and put in an Asia range that's overlapped with the previous day's Asia range. So we're having a nesting effect. My initial thought process for the day was going to be downside or a consolidation move, but as we went through and did this move during the London time period, I was more so favoring bearishness. It just so happens to do a retracement going into the New York opening time period. We have a pretty strong drop here after delivering into this sell sign of balance, but it's retesting the low of that hourly buy sign of balance. We get that failure to launch idea playing out here. It rallies into Thursday's London high, but fails to take out the high of the day. And notice that the bodies are staying below that liquidity on the closing basis here. And we begin failing to launch through all of this consolidation, and then eventually one more run up into that Thursday new day opening gap and a strong sell-off from the news that come out. We deliver through the previous day low and the Wednesday low all within a couple of hours. It leads you to believe that it's going to be a reaccumulation model with this delivery here, but seeing the failure after this purge of liquidity, it puts a red flag for this, and you can see the delivery afterwards just smashing everyone who was bullish on the open today. I want to take a little bit better of a look on that afternoon delivery, and this is our hourly redelivered rebalance. We kind of see how strange it looks on the lower time frames. Price has this large wick up close candle, which is essentially a bearish order block. It gets delivered through its high on this delivery and fails to reach that old daily buy-side imbalance low. So it leaves this imbalance intact and partially fills a range of it here. It starts dropping lower, and as we get through the previous candle's constant encroachment on the hourly chart, we expand through quickly and leave an imbalance on the lower half of that range. So you could be a seller at any of these candles here with a stop above the upper quadrant of that range, or to be safe above the range entirely. We can confirm that with seeing this up close candle here and the respect of the constant encroachment of that range, and following that, the candle bodies staying inside of our fair value gap level here. We create a up close candle at the low and take out some short-term liquidity inside the candle bodies here and deliver lower quickly and expand strong through all of those daily levels again, and then ultimately into a weekly fair value gap range right on the close there. On the 5-minute chart, I've narrowed your focus to the first half of the day and what I was looking at for my bearish sell setup from the execution video. We had news at 10 o'clock today. We opened with a delivery from the hourly buy-side imbalance in Asia all the way to the previous day new day opening gap, and we dropped harshly from it. And after we open at midnight, we drop below the Asia range low, and we do a short-term reversal here with a fair value gap as a long entry. We rally all the way back towards the Asia range high and fail to reach that level. We respect the new day opening gap from the previous day again here and begin selling off. And then as we retrace at the end of the London time period, this is all through London lunch here, we do that retracement and then a strong sell-off an hour before the New York opens. So all of this bearish price action is signaling to you that maybe the New York will be bearish as well. So any retracement would be suspect. And it catches everyone off guard who is trying to sell early, right on the open of 8 o'clock here. It gives them a small piece of a drop and then reaccumulates at the low of the hourly buy-side imbalance. We rally up and take out Thursday London high, and we begin to break down. I'm watching in this range for a bearish setup, so I'm already expecting that this fair value gap here is going to be an inversion array, and in the video I only had that range extended to the high of this candle. I didn't have it extended down to the volume balance like it should. As we delivered down through that range, I'm suspect of it being bullish because we already attempted to rally and failed to deliver higher than the Thursday London high. We started breaking down and closing below the constant encroachment of this fair value gap, and it closed below it completely if you only measured from the low to this high. After we put in this up close candle and traded below it, I was utilizing it as a bearish order block. So I was under the pretense of being bearish and being a seller at any point after this up close candle was violated. My stop loss was above the rejection block here, but it should have been a little bit higher. You can see in the video that I was finagling the stop loss on this level because we did so many drops lower that I didn't want to mess with the trade too much longer and just let it play out. So one last time they come out and take out anyone trying to short and moving their stop early like I did. They take out all those right there, and then if you weren't on the screen at the time or weren't ready or didn't have a stop where it should have been at the constant encroachment of this wick, if it was too tight you would have got stopped out and missed this move. But luckily I was still there at the chart, so I just re-entered a sell and caught a large portion of the delivery today, and actually was my highest catch so far in my career with in terms of points. So it was very nice today. Again, on the 5-minute chart, I just wanted to show you what that hourly redelivery rebalance looked like on the lower time frames and the respect of those levels. After that turning point, after redelivering into the 15-minute SIBI here, you can see how clean price action respects the lower quadrant of this hourly wick, the redelivery rebalance idea, and this 15-minute SIBI. We deliver strongly below and break that short-term low here and start selling off. And every time we retrace and put in up close candles, it's respected and continues bearish order flow to the downside all the way into the close. Same idea here on the 1-minute chart. I've broken the charts into two because the expansion was so large today it just didn't look right on the chart without doing this. So I've added our first presentation fair value gap for the morning session. I've extended that all the way through the price action going into 11, and you can see how consolidated it was during the open, and it really didn't get clean until significantly after the news, and going into the 10:30 time period was the best opportunity to become a seller. Seeing this breakdown after the news came out, any reattempt to deliver into this fair value gap or this fair value gap, you could have been a seller, and then capitalizing on this final gap that was created before the large expansion to the downside. This is the best, in my opinion, entry being in this gap because it's the lowest time in drawdown and the quickest into profit. So being a seller here with a stop above the 5-minute constant encroachment would be, in my opinion, the most ideal setup for today. And seeing expansion through that first presentation fair value gap is the cherry on top. So you just hold on for dear life and capture as much of this range as you can if you were on the right side of the market. Now we're looking at the PM session. I've extended the first presentation fair value gap of the PM session into our price action here, going into 2:30. So we rally up, create that first presentation fair value gap, and start breaking down below it. We attempt to rally from it and fail. So this is a strong high. We break down below it, and every retracement into this range is a selling opportunity here and here, and that's the upper portion of that 15-minute sell side imbalance. So this is your ideal entry for the PM session. And if you're on a higher time frame model, anything inside this range would be acceptable so long as you're accounting for a higher time frame stop loss placement. We begin breaking down through those higher time frame daily levels, shifting below significantly and into that lower daily buy side imbalance. We rally from the constant encroachment of that buy side imbalance to the low of the higher buy side imbalance on the daily, and then break down significantly all the way down into the low, and then begin consolidating as we do settlement, and then it breaks down strongly right before the settlement and tags that old daily high. Alright, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And as always, don't forget to like and subscribe. It really helps the channel. I will see you all next week.